Imagine for a moment that the economic outlook seems less and less certain, and whispers of a potential slowdown fill the air. People start wondering if everything is about to contract, if interest rates are going to rise further, and if the job market might cool off. In times like these, it's natural to feel uneasy, especially when you hear the word recession more often. But the truth is, history has shown that while some assets struggle when economic sentiment turns sour, innovation and utility can thrive if they address real needs that, in recent years, digital assets have captured a lot of attention. And it's no secret that some people worry about volatility. Yet, there's a difference between investing purely on hype and focusing on projects that aim to solve real problems, like transferring value across borders quickly and affordably. When the broader economy faces headwinds, efficiency can become more important than ever. And that's something technology continues to address, no matter the headlines on the news. It's helpful to recall instances where cryptos or digital tokens managed to gain traction even when everything else looked gloomy. There have been times when global uncertainty nudged people to explore decentralized finance, new forms of online transactions, or ways to avoid high fees and lengthy settlement times. Of course, not every new idea sticks around, and the risk is always there, but certain solutions offered compelling benefits that kept them going. This pattern suggests that when a product or service genuinely cuts costs or saves time, it doesn't necessarily fade away just because the economy is in a slump. There's a particular token that's been around for quite some time, associated with a platform focused on cross-border payments and liquidity on demand. Even though it has faced legal hurdles and questions about regulation, its core promise has attracted attention: near-instant transfers and minimal fees. If institutions and businesses look to streamline their processes during tough economic periods, that speed and cost reduction might stand out, especially if it means not having to keep large sums parked in multiple foreign accounts. The basic principle is that efficiency can become even more valuable when margins tighten. Still, it's understandable to feel a bit nervous. Cryptocurrencies have a track record of dramatic ups and downs, and it's impossible to guarantee that any project will never fall. Could a major player in the digital payment space suddenly lose all value? In the realm of technology and finance, nothing is impossible. But it's worth noting that the more established a network becomes, and the more liquidity it shows, the less likely it is to completely vanish overnight. Think about platforms that have built strong alliances with different financial institutions across multiple regions. It's not just about a single country's legal landscape. It's about whether the system can keep running globally even if one jurisdiction becomes difficult. What truly matters is the confidence that institutions, businesses, and users place in the technology. If, in a scenario of economic contraction, people see real advantages, faster settlements, fewer fees, broader international reach, the demand for that token may hold up better than many suspect. On the other hand, if negative sentiment dominates and no one is interested in using it for practical purposes, the price could suffer. When an asset is driven solely by speculation and hype, it becomes more vulnerable to abrupt downturns. But if there's genuine use behind the scenes, that use case can act as a support mechanism, even if prices fluctuate. During previous global uncertainties, we saw moments where digital assets initially dropped sharply, only to recover later when people realized that not everything had stopped functioning. In some cases, new technological layers evolved, and more participants entered the space, intrigued by the prospect of decentralized finance, lower transaction costs, or the ability to quickly move value without borders. This doesn't mean that every token bounces back or that big sell-offs can't happen, but it reminds us that fear often leads to opportunities for those still paying attention. So, how do you navigate it all? Staying informed is key. Understanding the fundamentals behind any project, whether it's focused on payments, smart contracts, or digital identity, is more important than ever when people start throwing the word recession around. If a token is building strong partnerships, enabling real-world solutions, and has an active developer base, it stands a better chance of weathering economic storms. On the flip side, if something seems purely speculative, it may be more at risk when a wider market feels shaky. There's a balance between being cautious and staying open to innovation. It's also wise to keep in mind that periods of economic uncertainty don't last forever. Markets move in cycles, and the same is true for technology adoption. Some of the most impactful advancements in history arose in times when the overall climate was anything but rosy. People look for better ways to do things, especially when budgets tighten and inefficiencies become obvious. That's precisely when innovations that solve practical problems can shine. Tokens or platforms that genuinely reduce friction in global finance could gain attention for their utility, provided they can clear regulatory hurdles and maintain trust. Now, you might be thinking, is it safe or is it too risky? The answer is that no investment is without risk, but knowledge helps reduce fear. If you're aware of how a technology works, why it's being used, and who's backing it, you're better positioned to make rational decisions. Markets will swing, some more than others, but remember that not all digital assets are created equal. Some might evaporate, but others may persist and grow in relevance. If you want to stay on top of this topic, the best thing you can do is keep learning. Explore the fundamentals, track the partnerships, and observe how real companies or banks are interacting with the technology. And before jumping into any asset, make sure you're comfortable with the level of risk. After all, these markets can test your nerves, especially when headlines about recessions or rate hikes hit every news outlet. On that note, if you found any of this insightful, don't forget to share your thoughts below and hit the subscribe button for more content like this. By staying informed and connected, you'll be better prepared to navigate the twists and turns of the market. There's always more to uncover, and the story is far from over. So stick around, stay curious, and keep an open mind.